And therefore, a lot of times what people say is, my crop is low and the market isn't reflecting my coffee. Well, it is, but maybe relative to Brazil or the supply flow out of Colombia or Vietnam, Indonesia, it's not going to look at your particular farm. That's where differentials come in. Okay. And so if there's tightness in one origin, but there's plentiful supply elsewhere, then the coffee market isn't going to necessarily rally. But you may see the country differentials distinguish between the supply shortages.
This episode is proudly brought to you by Mapper Forward's workshop, It's Time to Become a Coffee Consultant. Learn how to diversify your revenue streams and create freedom from your day job while saying goodbye to that alarm clock forever by becoming a consultant within the coffee industry or directly to consumers who have shifted towards home brewing and home roasting. Protect your income from challenging times in the coffee value chain by taking this course today. Go to mapperforward.coffee/workshops or click the link in the show notes for details. Welcome to the Daily Coffee Pro by Mapper Forward, friends. I'm your host, Lee Safar, and this is episode 4 of a fantastic 5-part series with the much beloved Judy Ganes from J Ganes Consulting. We are talking about the market structure and certified stocks in coffee in what is a wild year in coffee. And in this episode, we're going to talk about how do backwardation and differentials influence the market. We have touched on this, but let's do a deep dive on it, Judy. Help me understand how backwardation and differentials influence the market.
So they're both, let's think them as tools. So we have a tool chest and this arsenal of ways for the market to regulate the flow of supply. And one of them is the structure of the market, whether it's in carrying charge or it's in backwardation. And the steeper the backwardation, the more coffee that's going to flow to the board because the New York market or the London market is the place where you get receive a better price today. Okay, so you're going to sell to the board because tomorrow or 2 months from now, the price is lower. So we want to unload or dump that coffee into the marketplace. And one way to do that, if you don't have a buyer who's taking that coffee from you in the physical market, you deliver it to the board and you try and certify it and have it graded, and that becomes a repository for that coffee. That's one aspect to it. When the market's in normal carry, then you don't really have that much coffee coming to the board. Sometimes a bank might require the coffee to be certified for financing reasons. So if you wanted to finance your inventory, if it's certified coffee, presumably as an asset, the banks will see it as they can, you can claim against that asset better. So if you're using it as collateral, then you would want certified coffee. And banks sometimes would require that. However, the push and pull in this whole mechanism, because that's what it is. So the one is the structure and whether the market's in contango or is it in backwardation, and how steep is that backwardation? And the steeper the backwardation, so right now we're looking at 1.5 cents, 2 cents. Is sort of where it's been holding. In the past few months, it's been as wide as 11 cents, where the nearby was an 11-cent premium to the next deliverable month. So the first contract month versus the second contract month. And you would start to see more coffee moving in place. The other string that determines how much coffee comes into certified stock is differentials. And I don't think that most people really consider that aspect to it and how it's been this long-standing problem. And it wasn't recognized at first because certified stocks had been 6 million bags.
Mm-hmm.
And so when certified stocks are huge, well, who cares if there's coffee coming in or not? But they were getting depleted and more depleted over time. And as I said in another episode of the series, that at one point, Honduras came in and brought several million bags to the market because they had this record production. And they were selling it at a negative differential. So the board was the best place to deposit that coffee because it was tough for them to sell it into the physical market. There was enough buying from the roasters, so you put it to the board. And then the other backstop in recent years was Brazil from the 2021 crop. And then some of the 23-24 crop came to the board. But is this going to be a problem for 24-25 because the quality issues in that harvest?
When there are quality issues, do they turn around and shift the differentials?
Well, the differentials shift, but in this case, remember that for Brazil especially, you have a situation where the normal processing of the Brazilian crop is naturals.
Right.
And if the board isn't going, if the quality isn't there to process it as a semi-washed, or because of the quality concerns and reduced supply, that they could sell that coffee into the external market at a reasonable price. Why spend the money to have it as semi-washed if they're not going to get the returns for it?
Okay, I'm gonna ask some fundamental stupid questions on behalf of everybody right now, if that's okay.
Okay, sure.
So if they're not going to get the coffee certified, it's commercial grade coffee, they're not going to get the coffee certified, who are they selling it to in the cash market?
Roasters.
Just big, massive green buyers or people who are looking to buy just commercial grade coffee. So that's commercial grade coffee that gets sold to roasters rather than getting sold to the board, correct?
Right. So remember, if a roaster isn't buying your coffee or a trade firm isn't buying your coffee and the board is at a premium, well, it's a way to quickly unload that coffee.
Right. So these are these green buyers that go to Origin, just so that I can help people understand like the logic of it, right? So people think that a lot of people think that commercial coffee is only sold to the C market. That's how people have it in their head. And that's not the way that it works, folks. There's a lot of different ways that people will sell coffee. But what I get asked a lot is, what is the relationship between the C market and specialty coffee, or the C market and commercial coffee that's not sold to that? And go ahead and answer that if you don't mind. I know the answer, but I'd like it in your words.
So the function of the C market, one, as we said, about 2% is delivered. The real function of the market is one as a hedging mechanism for the commercial trade to offset risk. So even if coffee is not being delivered against the New York market, you still hedge it. And what that means is that if you own coffee, you're worried about the price going down. That's what's keeping you up at night, is that you own something and the value is going to depreciate. And so if you own it, you're long, then you take a short position in the futures market. So if the price does go down, you lose in the physical, but you make it back in the future. So it's a counterbalance.
Like insurance.
Correct. It's not like insurance. It is insurance.
It is insurance.
Okay. It is insurance. And for the same time, if you're a short coffee, that means you need to be buying coffee. You're going to be using coffee and you don't own it yet. So you have to go into the physical market to buy it. So that's where your short the market, and you're worried about the opposite, that the price is going to go up, that you're going to wind up having to pay more for that coffee. So you would be short physical, long futures. Now, another little trick here and understanding, it's not really a trick, but something to clarify is when you're talking about someone is long hedged or short hedged.
Okay.
It's not based on their physical book. It's based on the action they're taking in the futures market.
Right. I'm going to ask another silly question. This is my second of the two.
You're all good.
I've never actually asked somebody this. How is the price on the sea determined? Like, who is it? Is it all based on the number of contracts that are like the buyer and the seller? Is the market itself determining the price, or who determines the price and who determines the differential amount?
Okay, but it's a free market, and so it's the buyers and the sellers that are determining that. Now, I mentioned there's two ways in terms of what's important for looking at the coffee market. One is for commercial roasters as hedging, and the other is for price discovery.
Okay.
And so the board is used as a tool as being representative of the physical market.
Okay. So when...
Now,
Go on.
Okay. So now when we're talking about the physical market, we're talking about all coffee in the world.
Okay.
And therefore, a lot of times what people say is, my crop is low and the market isn't reflecting my coffee. Well, it is, but maybe relative to Brazil or the supply flow out of Colombia or Vietnam, Indonesia, it's not going to look at your particular farm. That's where differentials come in. Okay. And so if there's tightness in one origin, but there's plentiful supply elsewhere, then the coffee market isn't going to necessarily rally. But you may see the country differentials distinguish between the supply shortages. So when supplies are tight, and I'll give you an example. When Colombia had the shortfall in supply, a decade and a half ago, it was back-to-back crops that were problematic. He wound up where the Colombian differential went to $1 over the board. $1 over.
Wow.
Because you had a sudden drop in the Colombian crop. And at that time, there was a lot of roasters that were banking on receiving the Colombian coffee because it was being used as a standalone origin. And so they were having to meet the needs of retail shops that were selling 100% Colombian coffee. And so it created this whole panic. So what happens is the Colombian coffee shot up and the market was rising and the differential was moving up at a faster and faster rate. And then, it gets to the point where buyers are saying, well, wait a second, we can't afford to pay that price because we can't pass that on to consumers. So what is your next best priced coffee? That's like the famous expression coffee. What is your next best coffee?
Yep.
And when you're out of the best coffee, then the next best is now your best coffee. And so Guatemalan differentials went to 63 over, and Costa Ricans went to 53 over, and so on and so forth. And so the high differential for Colombian coffee elevated the price for similar coffees that were then used as substitutes to make up for the Colombian shortfall.
Who determines what the value of that differential is? The market,
or it's the buyers? It's when it really comes down to it, and this is going to sound so unfair, and producers hate this reality. Okay, and there's so many times where I hear people say, the buyers are thieves. You call every name in the book to a buyer, right? because the seller is disappointed in the price. And how dare they? I mean, this is what you hear, and the buyers control it. Okay. And yes, that is the reality. If a buyer doesn't like the price, they could walk away and buy something else. And, the producer will say, well, that's not right. They have to accept our price. But no, it's always a buyer's choice. And so what I say to someone would be, okay, if you're going to a store and you're looking at buying some beautiful strawberries and they were more expensive and didn't fit your budget, are you going to turn around and buy those strawberries? Are you thinking about the producer and how, they lost part of their crop and their costs went up? And so you should really pay the higher price for those strawberries, or are you going to turn around and buy bananas?
Well, the point there is that it's a choice, right? And you don't have to do
choice.
Exactly. And more recently, producers have been asking me about this and complaining that people don't want to pay the right price for these differentials. They don't want to pay the right price for coffee. And what I have been saying is, this year I'm a big fan of owning my own role in everything that happens to me. And perhaps this is a time for producers to do the same thing and say, I don't have to sell coffee to somebody who's not going to value the coffee the way that I want it to be valued. And my role in this is selling it to people who is on their terms rather than on my terms.
That's hard. It is the ideal. It's utopia.
It is.
But when you have to put food on the table and you have a family and you have to pay workers who are picking your coffee and breaking their backs, helping you, okay? Yep. You've got expenses. And sometimes you don't have that luxury of being able to hold back when you struggle to find the buyer.
I don't disagree with you.
You're forced to sell. And it's tragic sometimes, but that's with anything. That's why stores sometimes, they wind up overstocking. They thought they were going to meet a need and they put things on sale. And, it's to clear out inventory. And because they need the cash to meet payroll. I mean, you see that all the time in businesses, and that is the reality. And it's not just coffee. It's not roasters are acting against the producers. If it doesn't fit their margins, doesn't fit their commercial needs, then they have to take a business decision. Mm-hmm. And they have to do what's in their best interest. Now, there's I think that the coffee market, out of all the industries that I follow, does an incredible job at trying to be sensitive to the value chain and especially look at the producers. And we're the first step in the supply chain. And what happens is the producers want that higher price and they see the coffee being sold for $4, and they hear all about the coffee sold at $4. So there's a lot of coffee that isn't sold at $4. Mm-hmm. But they don't understand. They don't have that dialogue and the knowledge of what the roaster's expenses are and what it costs to open a retail establishment. And that $4, the price for the coffee in the cup is really, really tiny. And there's roasters who might not be making money. And there are a lot of cafes that shut their door. And how could that be if they're charging so much? Well, maybe they don't have the traffic and the volume and their rent went up and there was other factors, competition came in. So, there's that open dialogue of understanding everyone's margins, and it always looks greener on the other side.
It really does.
and so that's the tragedy in everything, is because the producer will say, well, wait a second, you're taking my coffee and you're selling it for substantially more than you're willing to pay. But they're not considering the millions of dollars of investment that a roaster makes for their facility and the packaging and the marketing and I'm not trying to be pro roaster or take sides here. I'm just trying to speak about the realities of the market. And there are times where everyone's hurting.
Well, right now is a time when a lot of people are hurting, if not for one reason, for another. Even producers who are making good money because the sea is up so high, they're panicking because they don't know if they're going to get rain. They don't know what's going to happen with regards to climate and labor. That's a whole other, black hole that we could go down, is the availability of labor, or the lack thereof, and the impact that that's having on the yield, because people are leaving fruit on trees and don't have the labor to pick it. Which brings me to my next question. What role does volatility, no, let me say it this way. How does volatility impact differentials and backwardation?
Okay, so let's think about what volatility is. Volatility, there's actually a calculation for it, and it's the annualized standard deviation, of where the price is going to be 1 year from today, plus or minus, the 2 standard deviations, the 95%. So it's that bell curve.
Yeah.
And is the market going to be 20 cents higher or 20 cents lower as 1 standard deviation, or 2 standard deviations, 40 cents higher or 40 cents lower? So, just ballpark. And so what the market looks at is, this implied volatility of how volatile, how much of a change in price is there going to be. What it does, it doesn't necessarily change differentials or change the market structure. It becomes, the market pricing becomes more erratic. You can't, the trend isn't as clear. So let me give you an example.
Yeah.
You can have a gradually rising market. Well, that's very predictable. The trend is up. Or you can have a situation where the market fluctuation is wide, but it's still predictable. Well, that's not volatile. Maybe in the beginning it is, but then you become accustomed to it.
Okay.
And therefore it's not as volatile, because that range becomes predictable.
Okay.
So volatility is when it's less predictable. And when things are less predictable, then how are you going to hedge it? And how are you going to know at what price is acceptable to buy it or sell it? Because what happens if the market suddenly tanks? So the example we have now, and I use the expression market could climb this wall of worry about when will the rain start in Brazil? Or is the rain going to be delayed and it's going to stress what the buds or kill the buds, cause them to wither before they blossom, or the fruit won't set properly for the Brazilian 25-26 crop that gets harvested a year from now, well, less than a year from now. And so there's that uncertainty. So uncertainty is volatility. That tends to increase prices, but it doesn't necessarily mean the differential is going to go up, because if there isn't an immediate shortfall, maybe roasters are willing to pay a higher differential. Also, when you think about differential versus the futures market versus the cash price, there is this relationship there, a symbiotic relationship. So when prices are falling, then roasters are more willing to pay a higher differential because they can afford to. It will still meet their margins and it'd still be able to profit. And therefore, they're going to pay higher differentials and reward the producers with that higher flat price. So the cash price is the C plus the differential, or the C minus the differential. Now, in other markets, the differential is called the basis. So it's The differential is cash minus futures. And there are times where the differential the basis strengthens. So the differential goes up, or there are times where it might weaken. Typically, in a normal market scenario, the lower the price, the firmer the differential. So the cash market price isn't moving as much necessarily as the futures market.
Right.
What's happening is roasters are willing to pay a better price. As the market comes up, which is what we've been seeing lately, is that roasters aren't willing to pay the high differential because then it's out of their budget.
So as the C goes up, the differential is really where the roaster has room because, as you said, the buyer is the person who's setting the price. So the differential, if I'm understanding it correctly, could be a place where they could shave a little bit off that so that they could, it's a buffer of sorts to the higher base price.
That's right. So they can maintain their margins and not have to increase prices to consumers and then hurt the demand.
Okay. Which assumes that, and that only works, I guess, correct me if I'm wrong, if the C has increased within the range of what the differential would have been plus the old price of the C.
Right. But then you have to consider that the differential also reflects not only availability, but quality.
Right.
So if there's, an outstanding quality on the crop, then the differential might go up anyway, or the differential could go up because there's limited supply. So that's what we've been seeing in the Asian market with the very strong differentials.
Right.
For Robusta because there's been such an extreme shortfall.
Okay. I am so excited about the final episode because we're going to be talking about the future. And this is where we get to see, I get to ask questions about what's coming next, because anyone who tells you folks that they know what's going to be happening in the industry in the next 12 months probably needs to visit a doctor or something, because I don't think has it ever been this volatile?
Yes.
It has?
Yeah, of course.
Okay. All right. Join us for the final episode of the series, folks. Peace, love, and peanut.
And far worse.
And far worse. Okay. Peace, love, and peanut butter. Have an amazing rest of your day. I really hope you enjoyed this episode, friends. Please don't forget to show us some love by subscribing, liking, commenting, and most of all, sharing this podcast with your friends. Check the show notes for links, including our sponsors and our Patreon. And stay tuned for more great conversations on the Daily Coffee Pro by Map It Forward.